Absolutely, Stephen. Quite a big pullback over the past 2 days in the global markets. Those consumer numbers coming out of the United States yesterday led us lower, and we saw also Asia carry that momentum forward, and we are also currently trading and at very low levels at the moment. In Asia, we saw, Australia, one major bank there came out with very disappointing numbers, which just goes to show that bad debts are still high, and a consumer-led recovery is still very far in the distance. So I think just a market reaction also towards emerging markets coming into focus there, where some economists have said that emerging markets have run quite a bit, and so we're seeing a lot of risk appetite leaving the market, and a great pullback, especially for emerging markets.
And of course, we have seen that very strong rise across all markets since March this year. And there was talk that it was time for a bit of a breather. Do you think that's what this is? Just a bit of a breather, perhaps?
I'm sorry, can you repeat that, please?
I mean, there have been calls for a bit of a breather on the markets because we have had a very strong run since March. Do you think that's what this is? A bit of consolidation? Investors perhaps taking a bit of a breather from that rally?
Yes, I think investors are taking a breather. I think everybody not sure where the market is going, and in the United States today we have 50 companies that are going to be reporting, and I think what we're going to see there is more of a focus on the basic fundamental economic data, and to see there where new home sales come in, and then also where durable good orders comes in, and also I think the market is waiting for the United States tomorrow to release their quote-unquote GDP numbers, expecting 3.2% from minus 0.7%, which is a major swing. So I think the market is just taking it easy, waiting to see what will actually turn the market around, and where impetus will eventually come from.
And of course, our losses on the JSE this morning really across the board, but resources stocks particularly under pressure. And of course, we have seen commodity prices coming under pressure with that dollar strengthening against the euro.
Yes, we saw gold come back quite a bit to be trading below the new consolidation level of 1,050, and now it's trading at about 1,038 the last time I checked. So a huge pullback there, and also our gold counters have also pulled back because of lack of interest in the market. Volumes are very low, and oil also has come down quite a bit. It's still at high levels to where it was previously trading, but around about I think $72. But we've seen quite a pullback that has really affected our markets.
Of course, we had the rand trading at 7.75 at one point against the dollar this morning, and that will be good news for our gold counters and our other exporters and resources stocks going forward. But quite a big drop in the rand's strength today, hasn't there been?
Yes, it has been quite a big pullback there. I think it's because also risk appetite has left the market, and perhaps some preemptive selling of the rand in light of the exchange control regulations that have been relaxed by Minister Gordon yesterday. And I think we've seen it also seems to be following what commodity prices are doing, and it also seems to be following the renewed dollar strength that we've been seeing in the market.
Of course, we had that medium-term budget policy statement out yesterday. How did the market react to that? Was it a market-friendly statement?
Yeah, I think from a trading perspective, what we're looking to see is how leftist the minister is going to be, and to try and find some hidden things in there that would, point us forward as to what is going to happen. And it was a very fair budget, we believe, and we saw that he didn't necessarily fall into the leftist kind of thinking, and I think the market received that very well. Especially with the relaxation of exchange control regulations. And we saw that individuals are now allowed 4 million, and the 180-day rule will be relaxed somehow for companies. And the market saw that as a good sign, because it makes doing business much better and much easier for us. And also, what's important is that they did say that they're going to leave the rand to free market play and not influence it or target a specific level. And I think international investors and local investors like that quite a bit.
We had CPI data just a short while ago, 6.1% growth in the year to September. That was from 6.4% in August, and just slightly better than the market was expecting, so probably quite market neutral, I should think.
Yes, moving back closer and closer to that band of 3 to 6%, so that can only be a more stabilizing force. But I think, ironically, the rand's strength has actually helped in curbing inflation there, because it has helped imported inflation into the country. And we've got other factors such as Eskom looking forward. The electricity tariff increases, how that would affect inflation. So, and also, I think we expect, the inflation to actually get into the 3 to 6% band by October. And so, not a bad showing there for CPI.